Good evening, everybody. Thank you for joining us today. Today's webinar will be giving you a crash course, essentially, to customizing your own portfolios. My name is Albert. I'm the Deputy Country Manager from StashAway.
Hi, Jack. Hi, everyone. My name is Jack. So I'm the client advisor here at StashAway and also a client engagement team lead here.
All right, so we will be doing things a little bit different tonight, whereby we are tag teaming for today's webinar itself. But let me give you a brief overview of, I guess, what to expect from today's webinar. So firstly, I'll be starting off giving you an introduction about what flexible portfolios are at StashAway. Then we will be doing a demo on how to create your own portfolios, and finally addressing any Q&A that you might have. So if you have questions, for those who are streaming in through YouTube, please do feel free to post your questions in the comment box, and we'll get back to you at the end of the session. Okay, so let's start off first with flexible portfolios, right? So what are flexible portfolios? These are portfolios that give you control, whereby you are able to pick the asset class. You can choose what are the allocations that go into your portfolio, and you have the flexibility to change them at any point in time. So for those of you who may have been investing with StashAway for a long time, some of you may want that optionality to be able to change what goes into your portfolio. And so this is our answer to your question to us, right? How can I change my portfolio? Hence, flexible portfolios. So some quick facts about this flexible portfolio. The aim is to allow you to customize the portfolio in whatever way that you want to be. In terms of the assets that are available for you to curate your own portfolio, there's a selection of about 55 plus of these kind of different assets. It's actually expanding, so we're constantly adding more and more over time. And you have access to, from high dividend yielding ETFs all the way to corporate bonds and even to commodities like gold. So, these expect more from us. It's just limited to 55 now, but there will be more later on. So all of these ETFs, they are traded or denominated in US dollars. So essentially that is the currency exposure that you'll be getting. And we will not be re-optimizing your portfolios, but you can expect them to be rebalanced to maintain your desired target asset allocation. So we will be going through in a few more slides how these look like. So just stay tuned for that. So why then should you use flexible portfolios? Ultimately, the idea is to make it easy to customize a portfolio the way you want them to be, right? And once you have created your portfolio, you then are also able to have the option to tweak it whenever you want. So we're not going to say, oh, you can't do this, you can't do that. So the entire option to change your portfolio at any time is with you, and there's no limit to how many changes you can make. On top of that, there's also fractional shares, meaning you are not limited to what is the minimum lot size you need to invest in a particular ETF. So we remove that barrier to entry for you to invest today. And the 55 plus ETFs that I talked about earlier, these are all curated by StashAway. So for those of you who have been following us through our ETF webinars that we do, there are multiple ETFs that do the same thing. So they track certain asset classes, but probably with different degrees of efficiency. So what we have done is we have curated these ETFs, which we think are best in representing the asset class that we want to allow you to have exposure to. And also, there is no minimum balance when investing in flexible portfolios. So you can put in any amount that you are comfortable investing into, and there's no lock-in period. So if you need to withdraw, you can withdraw at any point in time. So really, this is the ultimate flexible tool. And because we just launched this portfolio a few months back last year, it's free to try it out until June this year itself. So if you want to give it a try, go ahead. There's no strings attached. Okay, so how can you create a flexible portfolio? Essentially in 4 different steps. These are just slides to give you a brief understanding. The demo will be in more detail later. But essentially, the first step is you can do it from scratch with a template portfolio. You can, after that, add or remove asset classes given your preference. You can also adjust them, their allocations afterwards, and then at the end, you can find out, okay, this is the portfolio I've created. What is the risk that you are taking on when investing in such a portfolio? So with the first step, where you're able to start from scratch, or with a template portfolio, if you start from scratch first, you are able to choose from the 55 plus asset classes, 45 if you're in a few other countries that we're in, and you can add, remove, or change them at any point in time. So say if you want to have, you see big growth potential in Asia, you can then choose an asset class that gives you exposure to Asia. If you want to only invest in an ESG portfolio, you can also create something like that for yourself from scratch, right? So the other alternative is to create it from the template. This is more of if you're in the camp where you're unsure of what to or where to start from. And we have three different kind of pathways for you to start with. One is a risk focus, one is world index tracking, and then the other one is passive income. So the next slide, we'll go into detail what each of these three are. But on our side, we have, with our investment team, built these three different templates for you so you can easily access it anytime. And even though this is just a starting point, you also have that optionality to always edit it, and change the allocation at any point in time. Okay, so for this template itself, I mentioned there are three pathways that you can choose from. So first, you have the risk-focused template. So that is where you want to have global exposure, and where you select a particular portfolio based on your risk preference. So we go all the way from the most conservative to the most aggressive options. And this is very suitable if you're looking to just build your wealth over a long-term period. Whereas the second one is what we call world index tracking, and that's where it gives you exposure to global markets. So you want a global portfolio, and it tracks how global indices do. This is the portfolio for you. And it's very diversified across different geographies, different industries out there. The third one is passive income. So this is something interesting whereby I say if you want exposure to assets that pays out income from time to time, then this is where you can invest in the passive income portfolio. And again, these are all templates. It's a starting point. It doesn't mean it's where you have to end with. So you can start with it, change the asset allocation based on your own preferences, and then invest in it. So in terms of the different types of asset classes, then you can choose to create your own portfolio. Here are a few examples of what they are. You can have real estate, you can have commodities, you can have bonds, government bonds, corporate bonds, equities of different types from those in the US or even international equities. So as you can see on the screen here, it's really a big selection of the different types of asset classes that you yourself can get exposure to. And finally, once you have selected the asset classes that you want to go into your portfolio, you can adjust their allocations. Say if you have 5 different ETFs in your portfolio, then you can split 20 across equally to make it the whole weightage to be 100%. So that is really entirely up to you how you want to split the allocation. Okay. And finally, once you have created your portfolio, then we will show you, okay, this is the risk of the portfolio that you're taking on. It goes from very conservative all the way up to very aggressive in these 6 different buckets. And then within each of these buckets, we'll assign a number. Essentially, for those of you who have heard of the StashAway risk level, this is that's very similar to that. So if you look at a very conservative one, the 7% means that there is a 1% chance that your portfolio will lose more than 7% in a year. Okay, so that's how you are able to quantify the risk that you're taking on for the portfolio that you just created. All right, so what are examples of portfolios which you can create for yourself, right? So imagine the first balloon that you see here. One is a very personalized portfolio whereby you have a certain outlook on the sector and you say, okay, I want to manage it in a very active manner. So then you can create a portfolio that's tailored according to the outlook itself. Another way of creating a flexible portfolio is to go with a passive investing approach. Say you want to just purely have a portfolio that gives you exposure to S&P 500. That's it, just one ETF. You can do that too on StashAway's flexible portfolio. So very, very simple. doesn't require any active involvement at all. So the first one is more active. This one here is a bit more on the passive side. So whereas on the third one, which is something very interesting, I guess in the past environment that we've been in, is creating a cash equivalent portfolio for yourself. So say you want to have a very short-term exposure to US Treasury assets, right? And then with this, it helps you save and invest your money in US dollars. And typically these Treasury assets are, they are reflective of what the current interest rate regime is. This is a good way to get exposure to USD and earn some interest on that. And finally, we have the passive income template. So like I mentioned earlier, you have that passive income template to start with. You can customize it, whereby it pays out a certain dividends, be it on a monthly basis or even every half year. And you can then use that to, say, pay off certain expenses that you might have in your life. So these are just a couple of examples that you can use the flexible portfolio with. There are different permutations that you can play around to create them. But one thing I want to point out with the passive income template is that you're able to choose. The condition is that it needs to meet a minimum threshold for the amount that you need to have in your account for it to pay. So say if you have a Singapore StashAway account, you need to have a minimum of 20 Sing dollars in terms of your dividends before it's able to be paid out. Okay, so even if you have created a flexible portfolio in the past, doesn't mean that you don't have this option. You have access to this option itself, such that the dividends are paid out. Okay, so finally, what kind of an investor should invest into these flexible portfolios, right? It's actually someone who wants to try their hands at building their own portfolio themselves. I'm sure some of you out there are itchy to learn how to invest in an active way, to reflect your own personal beliefs. Or maybe you're someone who has already some investing experience and you know what you want, right? So say I want an exposure to just purely the S&P 500 in the US, then that's also doable with the flexible portfolios. Or some of you may also want to have control on certain asset allocation or certain assets within your overall investment portfolio. This is also another way to allow you to do so, to express your views ultimately. All right. So that hopefully gives you an idea of what to expect from flexible portfolios, what they are capable of. And we're going to jump into the demo right now with Jack here. He's going to run through the demo with us, and I will role play as a potential customer who's interested in flexible portfolios. Okay, time for a demo.
All right. Thank you, Albert. Let me just share my screen real quick. Give me a moment here. All right.
Okay, so Jack, I am a customer. I'm interested in creating a flexible portfolio for myself. Can you explain to me how can I go about doing it on the StashAway mobile app?
Yeah, so there are actually a couple of ways that you can access the flexible portfolio. So we'll just start with one of them first, which is you can use the create button at the top. So just tap on this. So just letting everyone know, I'm using a Singapore platform here. So the UI might differ a little bit depending on where you're in. So I'll be choosing to deposit from my own personal bank account. And from this page on, you can actually see customize the portfolio at the very bottom here. So just tap on that and you'll be guided to see, a little bit of information for the flexible portfolio itself. Okay, so moving on until here. So here's where you can actually see whether you want to start with template or from scratch. So Albert, do you have any preference for what you want?
I'm not really sure. Perhaps let's start with a template portfolio first, because I like to see what what's available for me.
All right, yeah. So just tap on start with a template and continue from here. All right, then you can see the three templates that Albert actually explained earlier on. So the risk-focused investing gives you a more diversified portfolio overall. So something like what you get in a general investing portfolio. It's just that we wouldn't re-optimize it for you. The next one is world index tracking. So this is maybe for someone that likes to take a more passive approach to investing themselves. On passive income template. So the passive income template is more income generated. So it's more income focused on assets that would generate income for you to pay out income in the longer term. So Albert, do you have any preference at this point?
The world index tracking looks interesting. I don't mind getting some global exposure to a portfolio there.
All right, so we'll start with global index tracking. Okay, tapping on that, you'll be able to see quite a few choices or selections here. So different stocks to bond ratios, as you can see from here. And if, let's say, you are interested in the asset allocation, you can just tap on see asset allocation. All right, and you can see, on international equities, what do we have, and for things like bonds, what do we currently have. So you can even click into the individual ETFs itself, and it will show you quite a number of information. But in the interest of time, I wouldn't do that right now. But okay, Albert, is this okay for you?
Yeah, I think 60% stocks, 40% bonds, world index tracking portfolio looks interesting. Let's go ahead and see.
All right.
Next.
Yep. So we'll click continue here. Okay, and you see the assets that you have selected here itself. You can even add or remove assets from this point, but Albert, do you want to remove or add anything?
No, I think we're good for now. Let's just keep it to this.
Okay, then just tap on continue. And for this portion here, it's very important that you take notice of the risk level. So
what does balance mean in that case here, right?
Yeah, so we categorize our portfolios into quite a few categorization or a few risk levels per se. In this specific portfolio, it basically means that there's a 99% chance that this portfolio wouldn't lose more than 25% of its value in any given year. Okay. So you know how much risk you're exposing yourself to essentially. If you scroll down from there, you'll be able to even see how this portfolio has performed or would backtracked, how it would have performed over different periods of time. You can even change up the time period that you're looking at, right? So like 3 years, 5 years, etc. So going further down from there, so you'll be able to see things like the sector exposure, the regions as well. You can see how much you're exposed to US, Japan, etc. And again, the asset allocation by itself. So is this okay for you, Albert?
Yep. Happy with the exposures, happy with the asset allocation. Let's go.
Yep. All right. And just tap confirm from here. And now you can review your portfolio. And once you're done, just tap I'm done reviewing. And you can immediately make a deposit from this page, but I'm not doing that right now. I'll just tap on the cross icon at the top and it brings me back to the home page.
Great. So my flexible portfolio is set up, right?
Yeah,
that's fine. Right. I guess what a question that comes to mind is if I've been investing for a while, but I then maybe have a change in views. I like to change my asset allocation to say have exposure to gold, exposure to the S&P 500 in the US. How do I do that?
Yeah, great. So you can just scroll down a little bit from here and you see the flexible portfolio that you have just created. Just tap onto that. Okay. And at the top there, you'll be able to, at the top right corner actually, you'll be able to see 3 dots. So just tap on it and adjust asset allocation.
Okay.
All right, and you'll be seeing this page and you can add or remove assets right here itself. Okay, so you mentioned you wanted gold and S&P 500.
Yep.
So you see gold here, so just tap on the plus icon at the side. And you mentioned S&P 500. Okay, so here we see a lot of US equities. You can even view more here. So things like S&P 500 is here. Just tap plus and continue to adjust the allocation here. All right, do you have any specific target weights you want?
I think it seems like that there's around 5 different asset classes. Let's make it equal across 20% weight.
All right, so just tap on this. And I can click just 20% done. Corporate bonds, 20% done. Okay, just across everything, 20%. And last one on equities, we have 19% plus the 1% cash allocation. You see the percentages actually changes when you're changing the asset allocation. So you know how much more you can allocate.
I see.
Right?
Okay.
So just tap on continue. And you see how it actually changed the risk level here. So from balance down to moderate. So it was 25% earlier, now it's 19. So know that it's a relatively more conservative portfolio compared to earlier. And same thing, you'll still be able to see how this portfolio would have performed across different time periods and the new sector allocation and also regions as well. All right. So if everything's good, I'll just tap confirm from here. And it's done. So you see your portfolio has been updated successfully.
Great, great. Okay. Well, I'd like to create a portfolio from scratch. There was an option that was shown earlier. Say I would like to have an income portfolio that is created from scratch. Would you be able to show me how am I able to do that?
Yeah, sure. So let's access the portfolio through a different way. So from your homepage itself, you can scroll further down and you can see flexible portfolios under featured portfolios. All right, just tap on it. And let's say I want to deposit from my personal bank account and click on create portfolio from scratch. From here, click continue. And yep, so you mentioned you want more income focused portfolio, right? Yep. All right. Do you have any specific ETF in mind?
No particular preference as long as it pays out a certain level of income. So happy to see how I can create something like that.
All right. Let's just create a portfolio with some bonds and also equities in the mix. Right. So something that will generate income, for example, floating rate corporate bonds. So if let's say you want this, I can just type plus and high yield maybe. So you notice we have quite a few different assets and ETFs here.
Yeah.
So if it's hard for you to locate the one you want, or you might just be interested in specific asset classes, sectors, regions, etc., you can even click on the filter icon at the top, and you can filter it right here. So let's say I want some US equities, for example. So tap on that, apply filter, and you see the range of equities we have. And of course, let's put in high dividends. So I'll go to filter again. Let's clear it. Go to assets again. Say you want some green bonds in your mix.
Yes.
So tap on it, and you see green financer. So just tap on the plus icon and continue to adjust allocation. All right. So for here, do you have any preference on how much you want to allocate for each?
Well, since there's 4 asset classes, let's have 25% equal weight across.
All right, yeah, let's do 25 each. So this is in no way, recommending that this portfolio is suitable for each and every one of you, right? So this would definitely differ based on your personal financial situations, based on your own even risk appetites and everything. So I'll just put in 25, and lastly, 24. Okay, everything's done. Click continue. And again, you see the risk level here showing that this is a more conservative portfolio, and it has a 99% chance that it wouldn't lose more than 13% of its value over a given year. So again, you'll be able to see how this portfolio would have performed over different time periods, and the sector exposure, region exposure, the asset allocation that you have selected earlier. So if everything's good, I'll just click continue here. Okay, so you see both your portfolios that were created earlier on here. If you want to review them, you can. After you're done reviewing, just tap I'm done reviewing. And all right, so you can make your deposits here if you want. If not, and just exit this, and that's it.
Okay. Well, great. I guess I now have two portfolios, one created from a template and the other one created from scratch. And thank you so much for sharing that with me.
Yeah, no problem at all.
Right, so that ends the demo. Everyone, I hope that was helpful in terms of creating a flexible portfolio for yourself. So those are just two different scenarios, but the potential scenarios that you want to, for your own self is unlimited. So many options out there based on how you want to reflect your personal preferences. Right, so now it's time for Q&A, and before we jump into questions from the floor itself, who may have certain things that they want to clarify based on what was just discussed. Let me ask you, Jack. I have a couple of questions surrounding flexible portfolios, which I hope you can help address.
Yeah.
And so, firstly, if say I am an existing StashAway customer and I have been using general investing portfolios for a while, am I able to swap, say, from a general investing portfolio to or convert from an existing portfolio to a flexible portfolio?
Yeah, so currently at this point in time, you wouldn't be able to do it. But what you can do is after you have created your own flexible portfolio, you can make the transfer from the existing general investing portfolio to the flexible portfolio. So what we'll do is we'll be selling off the assets from the general investing and then buying the new assets for your flexible portfolio. This shouldn't take more than a week in general.
Okay, all right, that clarifies it. And say if I what is the minimum weight that an ETF can have in a portfolio itself? Assuming if I only want to have a portfolio that gives me exposure to S&P 500, what is the smallest weight that it can hold in the portfolio?
Yeah, it can even just be 1% of the entire portfolio. Yeah, so we can have 99% in cash if you want that for some reason, and 1% in a specific ETF of your choice.
I see. And will this portfolio be re-optimized or rebalanced from time to time?
So we will rebalance it, but we wouldn't re-optimize it so that it stays the way that you want it. So rebalancing basically means that if you have multiple assets in the portfolio itself, we'll just make sure that it doesn't deviate from your target weightage that you want.
I see. And so I guess because there's different types of portfolios, flexible portfolios, which I can create for myself. So what is the, I guess, recommended investment time frame for me on a flexible portfolio?
Yeah, so this is a very good question and a very important one. I guess the first thing that you need to establish is what is the portfolio going to be used for, right? So if we want, for something for a shorter term, maybe, and maybe want to save in USD, for example, we can even just have a cash equivalent ETF, equivalent ETF in the portfolio itself. And then, that is suitable for you. So if let's say you want something that is for longer term, maybe even something that is on a thematic side of things, like a mobility ETF that invests in self-driving cars or even EVs, then that portfolio would be for a longer term, I'd say.
Okay, all right. Well, I think those are the key questions that I have. I believe some of you have questions relating to flexible portfolios, so please do feel free to post them in the comment box, and we'll address it right now. The first question here by Stephanie, right? Stephanie says, I tried to create a passive investing portfolio with just the S&P 500 ETF, but I was alerted to the fact that the risk factor is quite high. How should I interpret this?
Yeah, that's a good question. So as I demonstrated earlier, right, during the demo, you'll be able to see the risk index that is established or is shown in the portfolio itself after you have created it. So that would tell you how much risk that you're exposed to. So the S&P 500 itself, being just US centric and being all in equities, it could have slightly higher risk compared to, say, a more diversified portfolio with, a combination of bonds or gold, for example. So it might be high. So it really depends on, your own risk appetite, if that's what you really want in the longer term. Yeah.
Thanks, Jack. And thanks for the question. I guess next question is there a suitable timing to add, to edit, to remove assets in the flexible portfolio?
All right. That's an interesting question. So there isn't really a suitable timing per se. You can adjust it whenever you want. So there's no restriction in those terms. So it's really up to you.
Okay. And another question here by Iskandar. He's asking about income portfolios, which are I guess which is one of the options on the flexible portfolio. Do we simply get dividends that are reinvested into the portfolio, or are they similar to simple?
Okay. So for income portfolio, for the income template, I would say, so whether you get the dividends that are reinvested in the portfolio, it's up to your preference, right, or your choice. Like what Albert demonstrated or even shown earlier, you can adjust your preference to have it paid out to your bank account, or have it reinvested. So it's up to you if you need the extra cash flow or not. So is it similar to simple? So simple is more, conservative in nature. So it's slightly on the lower risk side of things. So how you shape the income portfolio to your liking would differ slightly.
Okay. We've got another question here. May I know how do I choose between thematic and flexible portfolios? Which one has a higher return?
Wow, that's a very interesting question on the return. So whether you want to choose the thematic or even the flexible portfolio, first it's up to do you have a specific preference on which sector that you want exposure to? So, the thematic portfolios have a combination of ETFs and also sectors. You can't really change up the asset allocation there. So if you want a combination of different themes or even different assets in the portfolio itself, you can choose the flexible one. So which one would have a higher return? That's very, very hard to tell, very, very hard to tell indeed. It would depend on how you create or what you put in to the flexible portfolio itself. So the return might differ, and at the same time the risk might differ as well. So it's pay attention to the risk. That's definitely a good choice.
Okay, great. And next question by Mohammed Munir is asking, from your perspective, Jack, what's the best portfolio for a long investment time frame, say 20 plus years?
Wow. Okay. So if you're looking at 20 plus years, right? So you have a longer runway, and you can even go for something that is of slightly higher risk. But of course, this highly depends on your personal, financial situation, whether you have a stable income, how many dependents that you have, things like that. So you yourself will know this the best. But from a rule of thumb perspective, the longer the runway that you have, the higher risk that you can take. So the benefit of the flexible portfolio is that it will even show you that this is a more aggressive portfolio that you have created. What are the risks that you'll be exposing yourself to, things like that. Yeah.
Okay, great. And got a question here also is from my existing StashAway simple portfolio, as someone, I guess, who is risk averse and conservative, is it advisable to switch then from StashAway simple to the flexible portfolios to earn monthly passive income? Which one is better, right? Risk focus, world index, or passive income?
Oh, all right. So let me just see. So this will highly depend on, I guess, your goal of the portfolio itself. So if you are someone that is looking into, having passive income, then you can definitely start with the passive income template and then make adjustments from there. And again, use the feature that we have in the app that shows you if this portfolio is more conservative or moderate or even of higher risk. So you can use that as a guiding point on if since you are a more risk-averse investor, you can ultimately choose a portfolio or go with a portfolio that has lower risk. So the widget itself will tell you how much risk there is.
Okay, all right, that's helpful. And the other question is, what is the difference between BlackRock portfolios, which we launched not too long ago, and flexible portfolios?
Oh, there's quite a bit of difference there itself, right? So the general investing powered by BlackRock portfolio, so that is a managed portfolio. So BlackRock themselves or the investment team and the research team at BlackRock will actually tell us, what assets to go into, what assets to remove from the portfolio, etc. So you don't really have much say in the asset allocation itself. So as opposed to the flexible portfolio, where you can actually, pick and choose yourself based on what you like, what you don't like, and your own personal outlook for the sectors.
Okay, well, that's a good way to explain the differences. We've got a question here also by Knox. So he's asking, can you please explain about the current weights? Do the StashAway adjust the target weights for the flexible portfolios after some time?
Yeah, so we wouldn't adjust the target weight or your target weight after any time. So the flexible portfolio is created so that it stays the way you want, right? So we wouldn't change it in any way. If let's say the weightage has changed, like an ETF might have outperformed during a certain period, another one might have underperformed. So we rebalance it back to your target rate, but we wouldn't change your target rate unless you change it yourself.
Okay, great. And I guess a question by ST here. So he's asking, would StashAway consider US dollar instead of a home currency as an option for direct deposits?
Okay. So I guess this one is not really that related to the portfolio itself, right? So in this case, we are always open to looking into new ways that customers can deposit. So I wouldn't rule out this possibility in the future, but it's definitely something that we are looking into, possibly in the future. If we do launch such a feature, we'll let you know as well.
Okay. Then we got a question by Victor here too. So yeah, he's asking, I've been investing in the general investing portfolios by StashAway for more than 2 years now. Is it wise then for me to transfer the funds to, say, general investing powered by BlackRock with the same aggressive portfolio? This is not really related to flexible portfolio, but maybe you can have a quick answer on that, Jack.
Yeah. So is it wise for you to do so? So it's really, at this point, it's really up to your preference. I wouldn't say, I couldn't really give you a confirmation whether one portfolio would outperform the other. It's really about choosing the portfolio that matches your own risk preference. You can even have both, for example. We use a different investment strategy compared to the general investing powered by BlackRock. So at the end of the day, it's just a matter of preference. That's one, and ultimately choosing the right risk for your own personal financial situation.
Okay, and then we have a final question here. I don't see any more questions streaming in. So a question here by Stanley, and I guess I'll take this since I'll be able to answer it. Is StashAway able to offer an ability to choose an individual stock in the future, something like Amazon? For now, we don't have plans for that. The idea is to be able to tailor a portfolio, flexible portfolio for yourself through ETFs, because we believe in ETFs as a very good and optimal way to gain diversification to different asset classes out there. Hence, for now, there's no intention to launch like a individual stock, purchasing through flexible portfolios. I hope that explains it. Okay. Okay. Well, I think we are past time, and I think that's it in terms of questions. I don't see anything else that is coming in. But if any of you have further questions, do feel free to reach out to us at support@stashaway.com. We do these today's an interesting webinar where we run through and do a demo on flexible portfolios itself, because it's been highly requested by many people. So here we are. I hope this session has been helpful. But if you anytime have questions, you can always reach out to us at the email that you see on the screen there. But if you have downloaded the StashAway app, you can also reach out to us through WhatsApp. Okay, so again, I hope all of you have found this session helpful and you've learned something new. And thank you all for dialing in tonight. Do stay safe and take care, everybody.
All right. Bye, everyone. Thank
Bye,
you.
everybody.